Hello everyone, welcome to Studio Rigo. On today's episode, we're going to talk about tax incentives and deadlines for new residents in Italy. Please consider this content as a result of years of practice with expats from all over the world that, like you, are looking for some professional advice. A person is considered to be a resident in Italy for income tax purposes if, for the majority of the year, they're entered in the National Registry of the Resident Population in Italy, or they have their place of residence or habitual residence in Italy. If you become tax resident in Italy, you must file taxes regarding your worldwide income and your worldwide assets. You already know that Italy has signed around 100 treaties or conventions for the purposes of avoiding double taxation with all the EU member states and with other foreign countries and territories. In other words, don't worry, you won't have to pay twice as much on the same income or asset. What kind of taxes do you have to deal with? Personal income tax, as known as IRPEF, is tax payable in receipt of different types of income, like income from real estate, income from employed work, income from self-employed work, and from business income. Italian income tax system is based on the progressive IRPEF brackets, meaning that the more you make, the more you pay. Tax rates go from 23 up to 43%. Tax payment deadlines. Taxpayers pay taxes via payment on account in one or two rounds, plus a balancing payment. In particular, each year you pay the balance for the previous year and a payment on account for a current year. The Italian tax year starts from January 1st and ends on December 31st, and the income is taxed usually the cash basis. The tax filing deadline is November 30 of the following year. There are also two different deadlines for the tax payments. The first tax deadline is the end of June, while the second one is the end of November. Also, in Italy you pay taxes in advance, 40% of the past year tax on June, 60% on November. To sum up, unless an extension is granted, the balance and any first payment on account must be paid by the end of June of the year in which the tax return is filed. The deadline for any second or single payment on account is the end of November. Tax incentives. Starting from 2016, Italian law introduced tax incentives to attract foreign residents. Here's what you could be waiting for you. Current facilities for the individuals relocating to Italy are the Impatriati regime, the new resident regime, which is a special tax regime addressed to high net worth individuals, the retirees regime, which is a special tax regime addressed to pensioners and retired individuals. In order to be eligible of any of them listed above, you have to become officially Italian tax resident, that is acquired when one of the conditions below is met in Italy for more than 183 days in a calendar year. So, the localization of a center of life interest in Italy, a registration in the Register of Resident Population, or physically presence in Italy. Let's start with Impatriati regime. The special tax regime for expats transferring to Italy for working reasons offers a low tax treatment to Italian source employment or self-employed income. The regime provides that, under certain conditions, just 30 or 10% of the employment or self-employment income sourced in Italy by individuals who transfer their tax residence is taxable. As a consequence, the maximum tax rate for personal income tax is about 13%, but can be lowered to 4.5%. The regime lasts for 5 tax periods, but under certain conditions can be extended up to 10. The facility is lost if the beneficiary fails to maintain an Italian residence for at least 2 initial years, or does not perform a substantial activity in Italy. The exemption is directly operated by the employer that will apply income tax on the reduced taxable basis, or it can be required on the tax filing. So an election to the employer is required, or an election can be made in the individual tax return. Individuals eligible for the tax regime are those who have not been resident of Italy for the last 2 tax periods. Also, you must have a college degree or be employed and have a managing power or be self-employed. Individuals holding a university degree must meet the following criteria: possess a university degree in Italy or abroad, have worked or studied for the last 24 months abroad, be a union or foreign citizen, be employed or self-employed in Italy. Employees with managing power must fill the following criteria: work for an Italian-based company, have a managing position or a high qualified role, be resident abroad in the previous 5 tax years. For all individuals, the regime is applicable for 5 tax periods, with a taxable income reduced to 30%. Should the individual relocate to a southern region of Italy, the taxable income is reduced to 10%. Also, the special tax regime can be extended to 10 years if the individual has at least 1 child, so the regime is extended for additional 5 years with a taxable income reduced to 50%. If the individual purchases a residential property in Italy, the regime is extended for additional 5 years with a taxable income reduced to 50%. And if the individual has at least 3 children, the regime is extended of additional 5 years with a taxable income reduced to 10%. For example, an individual who has 3 children and relocates to a southern region of Italy will pay taxes on 10% of the income for 10 years. The credit can be applied retroactively. If you miss the deadline, you cannot recover the extra tax paid, but you might still be able to qualify for the regime in upcoming years. Regime forfettario. Let's say that this regime is not just for new residents only, but it gives you the opportunity to start your business with just 5% tax flat. If you never had a partita IVA before and you're a new individual business owner or freelancer, you can pay just 5% on your gross for the first 5 years. After that period of time, flat tax gets you 15%, but you cannot make more than 65k per year. You must not have received more than 30k income from employment in the previous tax year. You cannot be a member of a partnership or professional associations, and the new activity must not be a mere continuation of a previous activity. Joining this special tax regime, you may have some other benefits like having a 35% discount on your pension contributions, having a flat deduction based on your activity code on your gross income, and no obligation of bookkeeping and registering. Italian flat tax regime for high net worldwide income. New individuals tax resident in Italy can opt for this regime, so they will pay an annual flat tax of 100,000 that absorbs and replaces any tax, income, and wealth tax on non-Italian sourced only income and assets, both financial and income from a working activity, even if remitted to Italy. Italian sourced income is taxable under ordinary rules. The regime lasts maximum 15 calendar years. Individuals can elect to apply the regime if they have been resident out of Italy for tax purposes for 9 out of 10 of the previous calendar years. Individuals applying for the regime can extend it on a voluntary basis to some or all family members. In this case, an additional flat of 25,000 is due for each additional member. To apply for the regime, individuals have to file a specific ruling with the Italian tax authorities, which can include family members. An election can be made also in the tax return. The ruling can be filed before becoming Italian tax resident. After that, tax authorities provide an answer usually within 120 days. Pensioners' tax breaks. Retired individuals who relocate starting from 2019 to a southern region of Italy can pay a flat 7% tax rate on their non-Italian sourced income, foreign pension, financial income, rental income, etc. for a maximum of 9 tax periods. The election for the regime can be made individual tax return. People retired from work who received a pension or annuity from a foreign entity, who has not been tax resident in Italy for the previous 5 years, who relocated to the municipality of the southern region of Italy having a population less than 20,000 inhabitants can be eligible. Individuals eligible for the regime are exempted from Italian disclosure of foreign assets, and they are no subject for the payment of the Italian wage taxes on foreign assets. If you enjoyed this video, please don't forget to share your experience, leave a feedback on YouTube, Facebook, Instagram, LinkedIn, and follow us for the next episode.